mission today is to introduce you to a company that I think is quite different, and for some of you who are attending for the second or third time, to perhaps update you on a company that's quite different. Hence my friend Big Bird here, and a lift from a very famous Sesame Street expression about one of these things is not like the others. The Toronto Stock Exchange, the venture part of it, has about 1,200 junior mining exploration companies listed, but there's only one Morien. Our ticker is MOX. Our market cap's about $30 million. This is the TSX-V composite share price on the left. That encompasses all companies on the TSX, but 70% of those companies are mining companies, and 9 of the top 10 are mining companies. So it's not a pure mining index, but it's pretty close to being indicative of what happens in the mining sector in the TSX venture. Morien is the one on the right, obviously. We have tripled in the last year. Our commodity is coal, and primarily we have a granite asset as well. But if you take a look, and we'll be somewhat metallurgical coal and somewhat thermal coal, leaning towards the metallurgical coal. So we would be in that blue band on the right and towards the upper part of the band as opposed to the lower part of the band. And so the best performing commodity last year was metallurgical coal. So we think we're in an upward moving channel, let's say, where the other commodities tend to move around us, as you would know better than I do. Last year in the venture, companies raised $2.6 billion in 976 financings, so that's your money going into companies. At Morien last year, or the last 15 months, we spent $1.6 million buying back stock from investors who didn't want to hold on to this. We bought a lot of that back for 20 and 30 cents, and 60 cents on Friday. We've reduced our share count by 11% since starting the campaign, and we continue on with that. What do companies do with surplus capital? I don't know. There seems to be a lot of uses for it. I know that we've got it. We've got $3.1 million in cash. We picked up $2 million this week in a milestone payment. We have another $1 million to come probably before the end of this year. There's another $1.5 million milestone payment we expect this summer, and there's a $400,000 milestone payment we expect sometime towards the end of the year, maybe early into the next year. So we'll have roughly $5 million of cash when the year end closes out. Who builds projects? We find in the junior mining sector, it's typically geological-oriented leadership using consultants to build out their mines. We've got some really strong players. The Donkin coal mine is being built by Chris Klein. That is not the Klein that was on the Toronto Stock Exchange that went bankrupt. This is a fourth-generation U.S. mining entrepreneur. He's made himself a billionaire and has, limitless cash, at least for this project, access to cash. He's building it using his own money. Our granite project is will be built by Vulcan Materials Corporation. That's America's largest aggregate and gravel company. They have over 300 facilities. This is a household name in America for aggregate projects, so they'll be building ours. That granite project is about a $90 million spend, so this is no little quarry in your neighborhood. This is a big operation. If you think about where jurisdictions are, because when you invest in a company, your money's often going to a foreign land. You can see from this chart, 53% of the time it stays in Canada, and 47% of the time it ends up in another country. Well, we're sitting here in good old Nova Scotia, pretty safe place to put your investments. The unemployment rate where our coal mine is about 20%. We're creating 120 jobs up there. Gives you a sense of sort of the safety that we have. Access to a lot of mining projects takes helicopters, climbing up bridges, going through mountains and things like that. Our projects are both adjoining paved secondary highways. In the case of the lower one, Black Point project, it is on tidewater. They will put gravel on a boat and send it to the mid-Atlantic of the United States. In the case of the coal project in Morien, it's about a par 5 from tidewater, and it is permitted to build a pier and export off of that pier into the global coal markets. As they're starting it up now, they're going to run it by truck into a local harbor, but as the project grows, they'll have their own facilities directly. How long does it take to build a mine? Sometimes 8 to 10 years to put a mine into production. Ours started on Tuesday night. The coal mine started production on Tuesday night. The Black Point granite will probably start around 2019 or so. We anticipate for that. We are up and running. If you look at the asset base, the typical sort of size of royalty received by companies is usually in the single-digit millions. And on the left-hand side of that chart, these are the largest assets of a number of the royalty companies like Sandstorm and Osisko and others. They tend to receive somewhere between $4 to $10 million from a single royalty. But they're bigger companies, they have royalty portfolios. We're much more simpler than that. But our royalty is not small. We think our royalty is going to produce for us $4 to $8 million a year. The lifespan of a precious metal mine typically is 8, and they can stretch out to 20 years, some are longer. Our coal project has a 25-year life, if not more. The granite project has a 50-year life. These are very, very long-lasting projects. And long annuities, therefore long royalties. In terms of price to net asset value, how you're pricing, most of the royalty companies, the streaming companies, trade at somewhere around 1 to, let's say, 2 times is maybe the bracket for price to NAV. We think we're trading around half, maybe on better days we're trading at 1 times net asset value, so we think we're discounted. How do you make money in these investments? From my perspective, if you look at the junior mining companies, increased commodity prices, resource expansion, reserve expansion, brings your value up. Project permitting delays can take away from your value, and cost overruns can take your value. Add those all up, that's your shareholder return. For us, we're a takeover target. We can repurpose this company, have other assets come into it, even hand it over to better operators than ourselves. We could pay out the cash in dividends, or we could go and find some other royalties. I'll spend a minute on takeover target, because you were asking about that. The operator of this company is Chris Klein, of the mine is Chris Klein. He's paying the royalties to us. It would not surprise me that at some point in time he says, what's the net present value of the royalties that I have to pay, and what is the market capitalization of Morien? And if that difference is big, he should go and buy Morien and extinguish the payments to us. So I can see that happening. There's a lot of smart people in the big streaming companies like Sandstorm, Franco, Cisco, and others who trade at, some of them, 18, 20 times cash flow. If they were to buy us, they could take a coal cash flow and put a gold multiple onto it. And so there's a value lift for them. So I think there is a prospect that somebody's going to come looking for us. To further on your question, which one are we going to do? We've got this company really tight, and we're just going to keep it that way. We'll collect that cash, we'll buy back stock, we'll pay out dividends, and we'll keep doing that until somebody comes along and decides they want to buy us, and then we're going to extract a really high price from them. We're happy to just stay right where we are. We'll go looking for other royalties. Oh, that's a competitive space. We're going to have to look for little corner shots to do that. But we'll just stay tight with this story. And if we keep paying out cash or dividends or buying back stock for a long time, that's great for shareholders. If somebody wants to come and take us over, we're happy to have that happen as well, so long as the price is right. So 5 reasons to own this company: royalty payments, zero capital, small call on management time. We expect $4 to $8 million from the coal mine from Donkin, and around $275,000 to $750,000 from the granite project. Remember that the coal project's a 25-year life, if not more, and the granite project's a 50-year life, so these are long-tailed assets. We've got $3.1 million in working capital, another $1.9 million to come. Significant upsize with Donkin in that coal is a highly volatile commodity, can go up a lot. There's a little part of this that's not talked about a whole lot, but we structured the royalty that we get 2% of the first 2 million tons, and we get 4% of everything after that. The project is permitted for 2.75 million tons, so we're getting a little over 2%. There is enough coal there for them to double production. If they double production, they triple the royalty, because we're 4% on the back half of that. So there's a nice leverage in there. If they ever decide that they want to put more capital in and double it up, our royalty gets tripled. And then lastly, we have a very disciplined approach to capital allocation. We manage the bottom half of the balance sheet as much as we manage the top half of the balance sheet in this company. So we'll look at highly accretive acquisitions, share buybacks. We've done a lot of that. We'll continue to do that. And we'll pay out dividends if there isn't a good use for the cash. So that concludes my talk. Thank you very much.